Da 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 da. Yeah, sorry, the music was a tad too loud. You guys can hear me all right, right? Everything's good on everyone's side here. Again, sorry, the music was a bit loud there. Forgot to turn it down before setting play on it. Yeah, we're going to be covering the dollar smile theory today. All right. Nice to see you in the chat. Okay. Let's get down into it. Hello, everybody. I'm your boss, Joe Boss, and welcome to another stream. Another nice Friday stream going into the weekend. Good stuff. There were a lot of people who got caught with their pants around their ankles today because they didn't understand what happened with NFP. And it's, you know, it's like if you read any outlooks, if you stay up to date with, you know, like once a day for 10 or 15 minutes, if you know where to look, you can just get a nice little summary and get caught up on all of the major economic news you need in order to make sure things like this here aren't actually surprising you, right? Now, it also does require that you are up during these economic events, right? That's one of the bad things about trading in FX is if you want to sometimes catch some of these trades, you have to be awake long before, at least a couple of hours usually before these events come up, so you can wake up, eat breakfast, get ready, read a little research, look at some charts, make some general trade plans, look at some economic expectations, maybe see what other commentary is coming out, and then you can be totally prepared, right? You are late with what everyone else is looking at, because you're competent and actually know what you should be looking at. And then when the thing everyone is, whatever economic event, whatever geopolitical meeting, whatever hits the news wire and realizes itself, you are capable of using your own autonomy to make your own damn trading decisions, right? That's the whole point of discretionary trading, right? Now, in a systematic way, you're just having you're programmatically putting your decisions into code and then having the robot execute those decisions automatically the best that you've programmed it, right? Because the computers are quite literal. They will just do what you tell them to do, right? So you need to sometimes put a lot of data and a lot of thought and sometimes a lot of math into those things. And that can make a lot of people just want to stick with discretionary trading. And so I build these tools to help with that. Now, I'm not here to talk about my tools. I'm here to talk about the dollar smile. Because when it comes to discretionary trading, you have to really understand what it is you're doing, what it is you're trading. And if you don't, you'll, like I said, just get caught with your pants held down around your waist and you'll trip and fall over yourself. Now, let's go ahead and cover some stuff here on the dollar smile. And I went ahead and I made this post saying, hey, you know, we're going to do this stream today. And I want to point out kind of in sales terms, what is the main pain point that I'm trying to identify here? Like, why are we talking about the dollar smile theory? Well, we had U.S. non-farm payrolls come out. And if you look at this chart, you can probably very clearly tell where those non-farm payrolls came out. And we went far, far, far. Now, if you were just using this indicator, you're like, oh, maybe we got our low around here. No, that's too late. Maybe around here? You know what? Maybe, but those are pretty sparse. Those aren't very dense dots. So low likelihood given the top is here. Lower likelihood of actually finding your low around here. But when you actually put what actually happened that created this bar into context, it makes a lot more sense that this thing just kept going and going and going. And you ended up trading what's called in the tail. So see these little indicators? I knew I'd said I wouldn't go too deep, but this is kind of the point of these indicators, is to help us put lines in the sand to actually understand, okay, this is where you have your tail risk, because you hear a lot of people use that term, tail risk. Well, literally what this indicator is drawing is the tails of the distributions of where lows and tops usually occur for a day. So literally past this like 45%, especially past this 25 percentile line here, yeah, this is where you get your tail risk. So you have to think for a second, okay, given the information I currently know right now, are we going to experience maybe a tail move? And you can actually, if you know what you're doing, almost anticipate, hey, we're probably going to blow past this at least 50th percentile, and Lord knows where we're going to stop. Maybe we'll stop around this area here. But if it was really a big deal like what we had today with USNFP, what happened with USNFP today, to give the context, is it came out totally freaking bonkers, man. If I go back to the economics channel, it's sitting right behind me. You can see as soon as it came out, we have a channel that's connected directly to Financial Juice. So as soon as something hits the wire of Financial Juice, not only are we reading it, but we have the ability to immediately forward it to other channels and to DMs with our friends. So we can immediately get people the information. Now, there is a bit of a delay here, but that delay usually is not very significant. It wasn't significant in this scenario. In a few times, it's like as soon as the news starts hitting the wire, things are moving like 50, 100 pips. And even in those situations, most people will not even be getting the news that quickly. Literally, only robots are going to be interpreting and trading that type priority of news that quickly and that directionally fast. And it's really in those situations you have to put things like stop losses in place to protect your ass, because it moves 100, or in those scenarios, price could move 50, 100 pips in a couple of minutes, and then by the end of the hour, you've moved several hundred. So don't get totally railroaded because you were away from the computer just for like an hour or a little bit, or you were asleep. You were asleep. There's nothing you could have done unless you maybe had your phone next to your head and alarms going off saying, alert hit, price hit, indicator going off, right? So if you have that kind of life where you just have your phone next to your head and it's constantly willing to wake you up in the middle of the night, ruin your sleep like that, I mean, sure, go ahead. In my world, it's probably easier just to set up a stop. Anyways. Okay, so that was another bit of a tangent, but essentially for NFP, and what caught a lot of people off guard is that when NFP occurred, it was like, oh my god, the payrolls, they came in so much higher. I'm trying to find the actual. Okay, so payrolls forecast was actually 52K, and forecast, actually there should be an economic calendar here. News flow, yeah, calendar. Economic calendar. And I should be able to scroll back here a little bit. So let's see here. Yeah, there we go. 154,000. No, that's for Canada. Government pay. There we go. Non-farm. Non-farm. Yeah, so actual was 172,000. Forecast was 85. And also, the last number got revised higher. The last number got revised higher. Yeah. That was the big surprise, is that the revisions were significantly bullish. So it wasn't just, oh, that's a really good NFP. It's like, oh, not only is that a good NFP, but the last like 2 or 3 NFPs also got a bullish revision, which is not common. I really don't know the last time that's actually happened, where we got a bullish surprise and then 2 bullish revisions for the prior months. Harold, you're 100% right. You're 100% right. The result was bullish for CAD too. Yeah, so we could check out dollar CAD. And you could see dollar got a lot stronger here against CAD as well, but not as strong. It was able to hold up a little bit more reasonably. So why did CAD, for example, only move 64 while, I don't know, New Zealand dollar, yikes. New Zealand dollar moved 80 pips. Aussie dollar moves almost 100 pips. And then Euro dollar, I think it moved 90 pips, right? 119 pips. My bad. I was about 30 pips off there. 119 pips, right? So, what's the deal here? Well, it's not just NFP going gangbusters, right? Because there have been times where we've had a positive NFP, but it doesn't move prices like 100, you know, essentially 100 pips, let's just say, for a rule of thumb, right? Why? We get the positive reversals. That was really, really good. But there's other factors to keep in mind that we also had leading into this that was making people over the last couple of weeks, including myself, have more bearish biases. If I turn my drawings back on, you could see I was trying to catch a short, trying to catch a little long there, trying to catch a short there. Oop. Didn't mean to move that. Going into this week, I was trying to catch a little short off these yield spreads going more negative. And that's this indicator, by the way. And now the yield spreads are moving back down negatively on a catalyst, right? Now, I'm going to do something here. I'm going to move this guy over here. And what I'm going to do is show you guys, okay, it's not just NFP. If I go ahead and I look at GDP, European momentum appears fragile with UK GDP essentially flat and employment growth has stalled. Swap markets at least expect one more RBA hike in November as the likely month. This persists despite Q1 GDP slowing. And then it's slowing in New Zealand. And it's slowing in the rest of Europe, in the Euro area. GDP across many, many countries in the developed and developing world is slowing down. But the United States, while its GDP may also be a bit stagnant, it's actually still doing better than the rest of the world. And kind of also similarly with inflation. Because the United States produces now so much energy and exports so much energy, it's able to at least stall energy prices much more consistently across the continental United States versus what other countries are having to deal with right now, which is much, much higher energy prices. We actually have a whole thread that we've been watching for, oh my God, when did it start? Like pretty much since the beginning of the commodities crisis. We have this Aussie fuel shortage / recession tracker thread. And it's just been, look, Australian housing price forecast scenarios. Like this is, so we're keeping an eye on Australia specifically. Ari here is an Aussie. And there's all sorts of things going on fiscally. They're trying to pass different laws, trying to make sure different taxes are essentially put on pause or not paid. And there's a lot of that going on in a lot of European countries too, where some taxes are just straight up being put on hold. The government's saying, do not pay these taxes. It's costing too much, and it's keeping energy, it's what we can do on our part to try and keep energy prices lower, right? I mean, I read somewhere, I think it was in, Ireland, that a huge chunk of the price that people pay at the pump in Ireland, it's like something almost like 40% of the cost was taxes. And so there's similar stories all across Europe and similar stories all across Asia of energy and retail gas taxes, and even some commercial gas like diesel and jet fuel. A lot of gas and energy related taxes are just being outright put on hold in order to try and suppress the price from rising the inflation level in all these different countries. So the fiscal income for a lot of these countries is going down. Meanwhile, the United States hasn't really had to change a whole lot. They haven't, while gas prices have gone up, relative to the rest of the world, it's not been as bad domestically in the United States as a lot of other places, because the United States is able to generate and export so much of its own oil. Now they're able to, take care of themselves a lot more easily. So what I want to do is, now that we kind of have the background of what happened with NFP and what's going on with inflation and what's going on with growth, now that we've kind of read a little bit of that summary, right? Now that's part of the research Discord. You'll find out all about that in the Discord. But now that we have those three bits of information covered, what I would like to do is now just go over the dollar smile theory. Now, the dollar smile theory has been around for about 20 years. And what we're going to do is we're not just going to read some random article or something to go over the topic. We're going to listen to the people who originated the idea at Morgan Stanley 20 years ago. And we're going to learn from them. And I'm going to explain it back to you guys and maybe pull up a chart or two and say, like, okay, this is what's actually going on. This is how we're currently interpreting the dollar smile here. And I have been a huge proponent of this theory of how to interpret the US dollar because of how consistently it has worked, how consistently it has helped me out. Give me a sec. Cat just opened the door and they left the crack open. So I'm just going to close my door real quick. Okay. So let's get right on into it. This right here. Oh my god, look at my shirt. I'm a big polka dot. That's kind of insane. Okay. Maybe I need to do something more along the lines of this. Okay, that looks a lot less weird. I don't know what's... I'm wearing a black shirt. I got a blue screen behind me. It should not be picking up the hinges. Maybe my shirt really is like a really dark blue. I don't get it. So, this video that's unavailable is still on YouTube. Guys, this is kind of crazy. This video from the guys who actually created this theory. Look, the original dollar smile framework was created over 20 years ago by Stephen Lee Zhen, our CEO and CIO, and what is it? Fadif? Yilmaz. I think I got that correct. I think. I don't know, maybe someone can help me with the pronunciation. But this is the main guy behind it. The original dollar smile framework was created over 20 years by Stephen Lee Zhen, and I'm not too sure about this guy when I go on and read other stuff, but considering it's here on the site, I'm gonna take this guy's word that this guy also was part of it. Okay, our co-CIO. Who were at the time two close-knit co-workers. Okay, that makes a lot more sense. So they probably were both at Morgan Stanley. Since then, countless investors throughout the world have utilized the hypothesis to explain the seemingly contradictory relationship between U.S. economic growth and the value of the U.S. dollar. In this section, we explain how the dollar smile works and provide empiric examples that prove the veracity of the dollar smile framework over time. So what is this thing? It's very, very simple. If you imagine a smile, in the very, very, very middle, at the bottom of the smile is where the dollar gets the weakest, is where the dollar depreciates. And that's when the rest of the world is growing faster, has lower inflation, is recovering from a recession, a global recession, faster. It's when the rest of the world is outperforming the United States. That is the condition where you have the gutter B. You have the bottom of the smile, and that is where the dollar goes down. Those are the conditions that the dollar goes down. Then you have the left side of the smile. Now, the left side of the smile is what people would intuitively think is risk off. So that means a recession, a depression. For example, stuff like what happened with COVID, stuff like what happened with the great financial crisis. That is when all hell is being let loose. And people just want their money somewhere safe, because there's massive amounts of uncertainty about the future. Nobody even necessarily knows what businesses are going to be alive in like a few months. It creates a lot of fear. So people they don't even necessarily even sometimes care about the yield. They just want their money somewhere where they know it's not going to fucking vanish. So that is the left side of the smile. Now, the right side of the smile here, this is the condition we're currently in. This is where the United States economy, through better or for worse, is doing better, is outperforming the rest of the world. So this could be like a scenario where we're in right now, where the United States is performing the best out of the rest of the world, and the rest of the world struggling right now because of everything going on with the Strait of Hormuz, with Iran, with the Houthis, Again, with Yemen and Hezbollah, like all these uncertainties, and then again with the Russia-Ukraine war, China and Taiwan, there are a lot, essentially all the stuff related to the trade wars here with the second Trump administration. All of this has caused some economic hurt to a lot of economies, and it has hurt the U.S. economy too, to a degree. But it's kind of like an all tides thing, right? Like if you have the biggest, most extravagant boat on a lake that's going down in levels, when people are trying to, out of a collection of boats to stay the night on, let's say, out of a collection of cruises to go on, people don't necessarily care too much about the water level, right? If all the ships are really nice, what they want to know is that the ships are being maintained, that there's good food on them, that they're properly staffed. And it's like these other countries are having problems right now with employment. They're having problems with inflation. And these might not be like the worst, absolutely most devastating problems in the world that are totally like going to destroy your economy. It's just like, no, this is just making it harder for us to compete relative with other economies, and we're doing the best we can to stay competitive. And it's just really hard in that scenario to compete with the United States because they have so much money, because they have some of the best businesses in the world, because they're able to manage their inflation, and they have the world reserve currency. So it's in these scenarios that you get put into sea, where it's not necessarily, okay, things are going absolutely terribly, and that puts you here in the left side of the smile. And the rest of the world isn't doing better than the United States, so it doesn't put you down here at the bottom of the smile in the gutter. So it puts you over here, where no matter the scenario where you're having, let's say, declining growth, generally, let's say all countries are declining or all countries are accelerating, it's who's at the top of that acceleration and who is decelerating the least that we care about when we're over here on the right side of the dollar smile. Because if the US is the one that's slowing down the least and the US is the one growing the fastest, we're going to be in this regime over here on the right side of the dollar smile, and that's going to make the DXY do what it did today. It's just going to go up and to the right like this, like a freaking rocket. So that is my explanation of the dollar smile theory. And that's why I think it's very, very important to actually understand what this is and what it's doing. And this is the explanation from, again, we can go ahead and read this. That was mostly my explanation of how I understand and how I interpret the dollar smile. But the material that I'm bringing up here is from the people who made it. And I'm going to say this is kind of sad. This is genuinely, it kind of makes me a little upset. When I look at this YouTube video, right? This YouTube video literally is from the guys who created this theory. They posted it about a year ago. It has 626 views. I'm like, how can it have so few views? How could it have so few views? There are so many videos, like the one I'm doing literally right now, and so many articles. Hold on, we gotta fix the green screen. It's like moving around a little bit. But there's so many videos, so many articles, and even AI responses that talk explicitly about the dollar smile theory being really important to actually interpret the likely directional moves over, you could say, for swing trading, right? It's really, really important in order to help understand how to take a macroeconomic interpretation of what's going on and turn it into something that you can actually trade with, right? That's kind of important. And it's a great theory that actually helps with that. And the guys who are responsible for coming up with the theory, the video has 626 views. I know, oh my God, you know what? I've been switching up my algorithm. I've been clicking on some ads of other people and their trading indicators, right? Figuring out who else is out there doing PineScript stuff, right? And actually kind of reaching out, seeing if there's anyone who wants some consulting done. Because I look at some of these indicators and I'm like, oh man, I could really do a good one for them and really fix their stuff up, because that indicator is loading a lot more slowly than it should be. It should not be loading that slow. It should be instant for the stuff they're calculating, it looks like. Or I look at their inputs and their settings when they pull up their little tutorial videos, their demo videos, and I'm like, oh my God, these settings are just kind of all over the place. And you know, that's just coming from a guy who's very, very experienced in PineScript and being very methodical and detailed with not just my scripts, but I have done consulting with other groups and other people and helping them build their scripts and making them like really pretty, look really clean, and then making the code clean and documenting everything for the future programmers, right? So I've been doing that, right? And I look at the videos, I look at the ads and how many views that these guys get. It's thousands and thousands and thousands of views, right? This video's been up for a year of one of the most important theories for FX traders by the guys who made it, and it's got just over 600 views. It's kind of crazy to me. It's kind of crazy. I don't know, dude. I'm kind of curious if you guys like. Look, I know people don't go out really looking for economic content, right? But you would think traders that are really, really, really into this stuff, like I am, would naturally find this content and be able to be like, oh, let me finally go and watch from the guys who made the theory how to interpret the theory on the dollar smile, right? Like, oh man, oh man, oh man. And I posted this a long time ago in this video. You know where I got it from? I did a huge search, and I actually have so much content on the dollar smile theory I'm not even going to be able to cover in this stream. But just here in the Discord, you can see like there's this little search in the middle. Look, this was from, what is it? April 20th. At 4:21, 1 minute off from 4:20. Oh my God. Almost on 4:20, at 4:20, instead of doing drugs, I was watching a video about the dollar smile theory. Oh my God. It's like, Joe, come hang out with us. We know you're in Vegas. The largest weed shops in the world are in Vegas, guys. So you have some friends coming over saying, Joe, come meet with us. Come meet with us, man. We're gonna have an awesome day. I'm like, dude, I don't know that dollar smile theory. Oh my God, dude. Oh man. Look at myself crying. Oh my God. That's so. Oh, this is kind of funny. You need to have friends who can make themselves laugh, man. You need to have friends who can poke a little fun at themselves too, you know. Oh my God. Okay. But yeah, you can see it's just like one thing after another thing after another thing. 20 2024. 2024. This is an old Discord server, man. Look, left side of the dollar smile, right side of the dollar smile. I wouldn't say this is like the best one in the world. And they put that little proportional to risk appetite thing in there. Oh, there's even more stuff in there. Dollar smile theory. Dollar smile theory. Pepperstone analysts anticipating a dollar smile reaction going forward. Yeah, so it's like even if I'm listening to other analysts discuss what they're doing, and they mention like, oh, this is here's how I'm going to be interpreting the dollar smile. I'm like, hey guys, here's a really good example of how a professional, of how someone who's employed at a brokerage, at an exchange, at a bank doing analysis, is interpreting this theory right now for these assets. Again, this is a research-focused Discord. And we put the research on the front end, and then we take the trading next. Because once you know, and that's also how to get new people really on point really, really quickly. Just front load the research. Say, hey, get comfortable with reading this stuff. If there are things you don't understand, just ask, right? And then you just slowly are building up a larger and larger group of guys who actually know how to read the research. And you know what? Some guys, they're busy as hell. They don't have all day to be reading stuff. They need summaries. They need to know what are the most important things happening the next day. That's what I got the trading group for. Like for the guys who, you know, don't have the time, but they have a little bit of money and they're willing to exchange, like, hey, I need some convenience here, Joe. I need you to, I know you don't like spoon feeding, but I need you to spoon feed me a little because I'm smart enough to get it and figure it out on my own. I just don't have the time right now. Help me, Joe. So that's what I got the trading group for, okay? But for everyone else who does have the time, who can take a moment to actually read through some of this stuff and is willing to ask questions and whatnot, then guess what? This is the route to go. You can go ahead and look up all this stuff yourself, either online, in the Discord, ask questions, all good. All good, all good. Now, let's see here. What else is there? Oh, wow. There's a second page of this stuff. Yeah, look, another dollar smile. Macrodesic. And then this is from Baby Pips. They have a whole thing on the dollar smile as well. Oh, my God. They put it behind a paywall. They put the dollar smile theory article behind a paywall. Oh, my God. This was not paywalled before. This was not paywalled before. Oh my God. They're charging people for this information. That's kind of disgusting. How about this? Let's listen real quick. Let's give this video a view. Let's give this video one more view so it gets a little bit more popular, right? If you guys want to watch it yourself, I'll just chuck it into the general chat. Or the FX chat. I'm just going to chuck it into the FX channel. So if you're here on the Discord, go to the trading channels. It's here on Forex. And I'm going to go ahead and pause the music. And we'll listen to the video just for... And the video's only 3 minutes long. Now, guys, if there's a chart you want me to look at, if there's something you want me to talk about, now's the time to start thinking about it and asking me. Because after this, I'm going to probably like say one or two more things. And then we're going to be done for the week, pretty much. I might do another stream that's more focused on interpreting my indicators and going over my expectations for the week ahead. But I'll just be doing that tomorrow, frankly. I will do that stream tomorrow. How about that? Because usually I do that stream today, but I saw so many people having trouble today because of that information. I'm like, this is a perfect teaching moment for all these guys. It's a perfect teaching moment for exactly this thing here. So let's go ahead and start watching the video. Oh my God, my shirt.
The original dollar smile theory was developed over 20 years ago by our co-founders and co-CIOs, Stephen Lee Jen and Fatih Yilmaz. It was
Okay, is it coming out? Is the volume good for you guys?
created to describe the somewhat counterintuitive relationship between US economic growth and the value of the US dollar, and has been used by countless investors worldwide ever since. In this video, we explain how the dollar smile theory works and explore the three phases, namely fear, the gutter, and greed.
Leave the video a like.
So what does the dollar smile refer to? Simply put, when the US economy significantly under or outperforms the rest of its peers, the dollar tends to be strong and increase in value compared to other currencies. This means that if there is a hard landing or even a crash in the US economy, the dollar could paradoxically rally. The theory and the reference to the smile is based on the fact that the dollar occupies a hegemonic position as international safe haven currency that, at least until now, has remained popular for capital transactions, even though the market share of the US economy as a proportion of the world's economy has steadily shrunk for 2 decades. In the fear mode portion of the framework, we could see US dollar strength due to a global recession and risk aversion. When global markets underperform, a risk-off scenario takes place when investors seek safe haven assets like US Treasuries, for which they need dollars. Hence, the US dollar strengthens due to its higher demand, independently of the state of the US economy. Moving from the left side of the smile, we enter the gutter, where we can see a weakening of the US dollar due to a US economic slowdown relative to the rest of the world economy.
There you go, rest of the world.
Due to poor performance as the US economy struggles in a weakened long-term economic trend, the US dollar starts to drop as money flows back into riskier assets. Finally, on the right-hand side of the dollar smile, we enter greed mode, where we can see a strengthening US dollar due to strong US economic growth.
Okay. I don't like the idea of fear and greed mode, personally, but you can see how well my explanation lines up with the explanation from the guys who created it.
The global economy rebounds and optimism returns. The US dollar appreciates and recovers. The economy enjoys GDP growth and expectations of higher interest rate rises.
Oh no! That's my trigger word! Expectations. Oh no, expectations is my trigger word. Guys, do you know what I say all the time? Trading is about getting exposure to the change in future expectations. And after learning and reading so many different people, from so many different people about trading, I found out that is the main key thing that they all literally have in common. They focus on what can change between now and the future. What are the current expectations, and what new information comes into the market, comes down the squawk, comes down the newsfeed, that can change our expectations of the future. And that's what causes a change in the movements of markets. So when that NFP came down and said, U.S. employment is doing phenomenally better than you expected, and none of that, we're revising the last 2 months on top of that. That's a huge, you can just simply call it, hey, this is a huge surprise. But it changes not just, okay, what was I expecting for NFP that day, and therefore how should I trade that day? This changes the future expectations that come down the pike for the rest of, frankly, the next quarter. This is that big of an improvement in NFP, that big of a positive surprise, that it changes expectations going out months. It changed our expectations going for, hey, when will the Fed hike, cut, hold? What are the odds of those occurring? Going all the way into the end of the year. Those rate cut, rate hike, central bank policy expectations change, not just for the next month, not just for the next meeting or the meeting after that. It changes essentially between now and the middle of next year. The probabilities for what's expected gets updated almost continuously, all in the same day. Within a little bit of the information getting released, it gets priced in. So it's important to understand how new information updates and changes future expectations. So there's my little +1 rant there on expectations.
In summary, the more significantly the US economy lags or has a clear lead towards the rest of the world,
how much more significantly the United States leads or lags the rest of the world, the stronger the US dollar tends to be.
Stronger the US dollar tends to be. On the other hand, if the US economy modestly leads or lags, the US dollar tends to weaken.
Yeah, it goes into the gutter. So if the US is not in like second or first place, or even arguably third place in a ranking of GDP, growth, inflation, PMIs, all that sort of stuff, then we're going to end up in this gutter here. That's it. Had a little bit of a cough there. So if the United States is in the first, second, or third ranking, you're gonna end up on the right side of the smile. First, second, or third ranking across a bunch of different economic variables. If, like, for example, I know this because I watch Trader Nick, and I'm friends with guys who are in Trader Nick's Discord and have the Edge Finder. He's been posting all his videos on the Edge Finder. Like, guys, look at the scorecard for the US dollar. It's insane right now how much more positive the US is just on a basic macroeconomic scorecard compared to the rest of the world. It puts a lot of pressure behind people to stay long the dollar just on a momentum basis. Because scorecards are a type of macroeconomic, momentum trading. Essentially, it's a type of swing trading. But it can really help with informing kind of how to prioritize what currencies and what assets to go at, depending on how the scorecard changes over time. Now, when the United States is kind of in that third, fourth, fifth, sixth place, but it's not in dead last. Actually, even if it is also in dead last, then that means that the rest of the world generally is improving at a faster rate than the United States. So the dollar devalues, and that is the keyhole, the gutter that you have there, where the dollar actually goes down in value. And this is why it's so confusing to so many people to actually find out, when does the dollar go up? When does it go down? And, I forgot. I forgot to make sure I kept my freaking screen locker off. But, no, this is the useful bit, right? This is the useful bit to actually start with doing some much more competent interpretations of the dollar. I have a general cue for you, Joe, says Harold. Given the IPOs and the offerings, SpaceX, next week, right? Can we assess if the volume will likely cause rotation out of existing stocks? It's a lot of it's going to be new money. So here's the thing. A lot of pensions, a lot of financial institutions are not going to sell off their stocks of other companies in order to generate the revenue or generate the cash that they need in order to acquire SpaceX shares. They will get a line of credit. They will borrow money. They will loan against the shares maybe that they currently have. They'll do whatever they can to not actually share the shares themselves of these other companies, because they may be holding on to these shares for less than a year. And for the shares that they have been holding on for less than a year, maybe they don't necessarily want to sell them at all, because they have future expected value that they want to capitalize on. Now, maybe you can do an opportunity cost and say, well, is the future expected value of the share that we want to hold on to, if we liquidate it and get the cash and buy SpaceX, is that a better opportunity? Is there a higher expected value out of that? Would it be a greater opportunity cost not to actually liquidate those shares? It's a lot of thinking, and it really does depend on the institution. But my guess is that more institutions are going to just be trying to get lines of credit and loans, essentially, to buy SpaceX, and then Anthropic and OpenAI down the pike when those IPO later this year. And also kind of also with Google. Let's see here. Hence, take U.S. indices down. No, it's not going to take U.S. indices down at all. People are not going to divest out of it. No. But also, so for example, the only indice that SpaceX is going to be able to join really, really quickly, because the NASDAQ changed their rules recently. I think it's going to be like, some people say it's 2 weeks, some people say it's less than 1 week, that SpaceX is going to be able to be included. Once the IPO, they wait a week or 2 weeks, and then they're going to be in the NASDAQ index. It's going to be a big, big deal. There's so many people doing really in-depth videos and commentary on precisely the SpaceX IPO. I really would look up anything I could on it if I wanted more information. ETFs may need... Yes, ETFs would rebalance, but the way they would rebalance is not by selling off shares that they currently have. It's by acquiring enough SpaceX shares. That's how they do it. At least at first. They're not going to try and, acquire a little tiny bit of SpaceX shares and then sell off the rest of their other assets in order to make sure that the portfolio fits a specific balance. Because then once they want to grow the portfolio size again, they then have to re-buy back those shares. So it's just easier to quote unquote keep the portfolio unbalanced and just accumulate SpaceX shares over time, which is one of the reasons why the S&P isn't going to be doing this thing where they include them into the index after like a week or two. They still want like a month or two to see how the IPO goes. And then they'll be able to actually figure out like, okay, here's how many shares we need to acquire for it to fit proportionally into the Standards & Poor's index, S&PX. And that's how I imagine that they approach it. I am like 100% certain that there's a definitive answer to this somewhere from S&P. Like, I actually, in all seriousness, if you really, really, really wanted an answer, you could probably just go to S&P's website, ask their AI to give you a person, and then just ask someone at S&P a question. Because they have so many different contact forms for so many different departments. You quite literally could just send them an email, probably at any department, say, hey, where could I get this information to find out, like, how many shares, what proportion, like, what's the process of onboarding a company like SpaceX? What's the exact procedure? They'll absolutely have some document to walk people through. Or there'll be a public article explicitly about that, going into detail about exactly how they do it. I wouldn't be surprised if it didn't already exist, frankly. Oh my god, I totally forgot to turn the music back on. Do you guys prefer music or no music? Let me know, because there's 4 guys watching. Remember to leave a like and subscribe, by the way. Let's boost up these videos, because if I only do like 1 video a week or 2 videos a week, for this week, because I want to still do my economic outlook for next week, right? I got to go and use my indicators, show what I'm doing. But I really wanted to focus on this because there were a lot of people who really, really, really needed the help. But let me know right now, music, no music. What do you guys personally like? Like, Harold, what do you like? Ani, what do you like? Music, no music.
To discover more about our macroeconomic
sign up for our research
trial.
Actually, I wouldn't mind. Yeah, it's free research, free weekly research. So let's actually do a little bit of looking around here. Research and insights. Okay, I don't see a report. Current level of dollar yen, stable but sustainable. Japan would be more balanced with dollar yen closer to 120 to 130, with 125 described as a more stable level. Around 160, the weak yen supports exporters and equities, but it also pressures consumers, reduces Japan's international purchasing power, and weighs on Japanese government bonds, JGBs. The next big move in dollar yen, we believe, is down. Alrighty. And then, of course, they have a more detailed look at it, and then these are their main research points. And they're like, hey, you want more? You want more than just the little blurb, right? The summary, the highlight. And then let's see here. Oh, and then this is just another page for exactly the same information. Yeah, it's literally exactly the same information. Okay, that's good. That's good. Hey, Tone. Nice to see you. It's been quite a while since I've seen you around. I'm so happy to see you here, my man. I prefer no music, but I think music is more appealing to more people. That's a very good way to put it. That's what I would have initially thought, frankly. Because when I'm programming, it really depends. Sometimes I'm just like, dude, I just really need to talk in my head for a bit quietly and go step by step. And then sometimes music gets in the way. And sometimes I'm putting on music every single day and I can really get into the groove, thinking about the problems I'm trying to solve much, much more elegantly when I am listening to like the right music at the right time, maybe not necessarily working on the most insane problem, right? Man. Okay. Well, I'll turn on the music because now, guys, it is time. Oh, what's going on? Oh, that's so weird. Check this out. I have some light coming through my green screen. That is too weird, man. That is too weird. The green screen's all thinning. Well, hopefully I just fixed it. Okay. So, let's see here. Good to see you too. Always been around Discord. No particular reason. Still always around. Yeah, dude, so many people lurk in my Discord. Because people are just... It's kind of fascinating that people will join the Discord and then they're like, oh my god, that Outlooks channel on the Discord has just so much useful information, right? Like, oh man, every single, like, I would never know how to get access to this information. It's free. It's publicly available. It's Googleable, man. I just post the public URLs here, and then you go to the site and you do all the stuff that you want to read there. And they're like, people are just kind of fascinated that I do all this research, and they're like, oh man, just keep giving it to me. Just keep feeding me exactly this. Just put it right into my veins. Just put it right into my veins. That's exactly what I need right now. Just more of this information. This is keeping me on top of stuff, right? But man, I'd like to have a little more activity. I'd kill to have a little more activity, but you know what? I've been already doing this for like 2 or 3 or 4 years. I don't need other people's validation to keep doing this. I mean, look, this is a big thing that helped me get better, is doing this sort of top-down research methodology where I try to start with this macro stuff, and then I do more micro stuff, and then I go asset by asset, right? And I try and cover as much of the world as I possibly can, understand as much of what's going on in the world as I can actually get. Like, again, the more you learn about the world, the easier trading can get, because when new information comes down the pike, you're going to have a higher likelihood of actually understanding how that piece of information changes future expectations, and then figure out how to take action on that. Like, oh man, this thing with NFP just came out. Oh my God, this makes the US so much more economically stable. I should probably be buying the US dollar. I should probably stay in the US indices, because the US indices didn't do so well those last couple NFP reports. They're kind of meddling. But now that we've had these positive revisions, like, oh man, this is looking pretty damn good. Let's actually check out NQ real quick. Oh man, NQ just went down. Actually, I am confused about this. I can explain the dollar theory. I can explain the dollar smile theory all day long. But if someone in the chat could explain this to me. Oh man. And this is when NFP came out. This is right when NFP came out. I think. Does it have to do with the likelihood of the Fed hiking going up? Can it really be that? Like the probability, like, okay, the Fed's main concern, by the way, right now with hiking rates, with the FOMC doing more rate hikes, is that they don't want to kill inflation. Yeah, borrowing costs went up. Well, arguably, a little bit. Yeah, I mean, yeah, yields did go up. Real quick here. Let's go ahead and pull up bonds, TLT. I mean, and, by the way, we were totally right on that. Look, hey, there's a big red line right here saying down and to the right. And I think we went down and to the right. No more rate cut. Yeah, no rate cut. No rate cut. Oh, so it's just the odds of the rate cuts went away, I think, right? So the odds of the rate cuts went away, so maybe that was some divesting going on. But man, I do have to say, that is kind of a bit surprising. 5% lower on a positive NFP. Like, that can't just be a dollar strength thing, by the way. Because there's a lot of people who will say, and they do this with Bitcoin as well. But I thought this was settled. Okay, before I get into this, with the dollar being this thing that's inversely correlated with the NASDAQ or with the S&P, because that's just not true. The dollar can go up when U.S. equities go up. It just happened in this recent rally. Over the last few months. But there's also this other thing with people saying, US 10-year yields also spiked up 1.5%. But dude, that 5% move down in the NQ On this kind of seems like an overreaction. Tone, do you think that's a reasonable assessment? It kind of seems like an overreaction. One thing I am going to do throughout the day today is I am going to be reading the commentary of a few equity guys that I like to read and seeing why they think NQ went down on this NFP. It's kind of nutty to me. But if Tony, if you don't have an opinion, just tell me you don't have an opinion. Same thing with you, Harold. Here, let me know. Like, do you guys have a theory on that? Now, there's quite a lot of commentary right now with Bitcoin, BTC, USD. A lot of people are saying, "Oh man, this drop in Bitcoin that we've had, it's just down 20% since May 21st." I thought we were going to be range bound. To be frank, I thought we were going to stay range bound, but then it came out that Micro Saylor was selling off some Bitcoin, right? That's the big thing. Some institutions, first we had BlackRock selling off some Bitcoin to Coinbase, and now we have Master, we have Strategy selling off some Bitcoin. So Bitcoin's taking a bit of a hit right now. And so when Bitcoin was going down this much, there was a lot of people who, again, I thought this was settled literally before COVID. Literally, I thought this economic debate was settled like way before COVID as far as in regards to Bitcoin. Like, look, outside of this thing, literally outside of today, and look, we can even do this side by freaking side. So we can go here, side by side, BTC USD. So you can see you have one red day here since so here's 1st of June. If I could just get it to plus, that's 1st of June. That's 1st of June. Come on. There we go. So this vertical line here is 1st of June. This vertical line here is 1st of June. I was hearing constant commentary throughout these days here. Why isn't the NASDAQ going down? Why isn't Bitcoin going up with the NASDAQ? Why aren't they not correlated? Why? Guys, Bitcoin is not correlated with any other asset. And frankly, altcoins and shitcoins are just correlated with Bitcoin. Not that shitcoins are correlated with these other coins. Bitcoin works on its own economic cycle. It has its own economic cycle. And the people who make the assumption that Bitcoin has all these different kinds of spurious correlations that should be lasting for a very, very long time don't actually understand, okay, there are all these miners that are having trouble right now getting access to power because they're competing with all these AI companies. They're having problems getting energy to actually turn on their miners. They're having problems getting the chips to actually build their ASICs. They're having a huge, huge problem with their infrastructure, simply put, and expanding it because there's massive competition that they cannot compete with. Bitcoin miners are not as big as all these AI tech companies that are trying to expand their data centers, or all these huge trading companies like Jane Street. They do not have the money to compete. So the few companies that are able to take out enough money to get just the morsels, the drop, the one, can I have some more soup, please, to the AI semiconductor manufacturers? Can I have some more ASICs, please, for my Bitcoin mining operation, please? Please. They're just like, they're begging. They're begging for power supply. Some Bitcoin miners have had the rug pulled from under them. because they'll be bidding like a year or two ago, and now it's not like this. They just don't get them anymore. But a year or two ago, they would have like, hey, we're going to start to buy some production for some generators, right? Or some power lines, or some HVAC stuff, or some ASICs, right? Or we're going to hire a couple of smart guys to help run our operation. All of that stuff now is being put in competition with AI. And guys, just it's not like, oh, these guys have a lot of money. These guys have some very ruthless salespeople. Like, they will get on the phone. They will try and learn everything they can, not just about your Bitcoin mining company, but they're doing that to find out who you're getting your stuff from, so then they can contact them and say, look, we know you have these orders to send this energy infrastructure or these ASICs or whatever to this mining company. We'll pay you 3 times more if you give it to us. What do you have to do to break the contract? Like, they go as far as that. What do you need to do to break the contract? We will pay the penalties for you to break your contract with them, so we can get that infrastructure sent to us instead of them. Like, that's how far it's going. So it's not just like, oh, these are just some tech salespeople. Like, no, they have like carte blanche, blank check type of money where they'll do that kind of stuff. It is cutthroat, right? And so when all these miners start having a really, really, really hard time keeping up with the couple of companies that can actually stay afloat, that can actually get some supply, then guess what? Those are the handful of companies that are going to end up dominating a little bit more and a little bit more and a little bit more and a little bit more. And it's in this type of period, and I made videos on this, like, I think in the fourth quarter of last year, talking about how exactly this was going to play out. There is going to be a drop here in Bitcoin. It's going to keep going and going and going and going. And I was like hopeful, like, oh man, maybe this is actually stabilized and things will start recovering and everything will be hunky-dory. But now we have all this new information and we have to update our expectations, right? Well, guys, there's only so much time you can stay down here before you have things like BlackRock selling off their coin, before you things have like Strategy selling off their coin, before you have things like miners operating at massive losses in order to keep their organization going. A lot of miners have, over the years, invested, and they need Bitcoin to like stay well above 60, 50, 40K. Like, there are some miners that have incredibly cheap power, that are able to get the latest, most efficient ASICs, that are able to be very, very competitive. But man, their Bitcoin break-even price, let's say, a lot of miners, their Bitcoin break-even is it's pretty close. Their margins are super, super tight. And usually what ends up happening is they take out these loans and they get very liberal with the interest rate on them. So when the margins between their break-even price for generating Bitcoin and the actual Bitcoin price gets really, really uncomfortably close, it makes the interest on their loans a lot harder to hold on to. And so guess what they don't do? They don't try and go out of business right away. They don't try and sell off all their ASICs and all their infrastructure and all that stuff. What they first start to do is they first start to sell any Bitcoin that they currently have on storage. Any Bitcoin they have in cold storage, they use that for financing, just keeping things kind of afloat. But there's a runway to that. Like, if Bitcoin, for example, stays under 80, 100K for like I don't know, like another 2 or 3 years, a lot more consolidation will happen in the mining space. A lot more consolidation would happen. Hey, Tone, have to drop Joe. Hit you up on Discord. Always love hopping in these lives. Thank you very much for hopping in again. Yeah, these lives are getting a lot more engaging, and I'm having a lot more fun doing them because it's not just like, oh, I'm going to go ahead and talk about my indicators. It's like, hey, here are some interesting, unique ideas that I have and that I'm willing to share. Just here on stream and talk with people about it. Now, I said I'd probably end the stream shortly after one of the other things. Now, again, Harold keeps mentioning the yields. And man, yeah, semi-sector. Semi. Actually, I think if I do this, I should have U.S. equity sector. Do I not have semis? Yeah, I don't think I have semis. That's semiconductors. Are you talking about semi-trucks? You're talking about semiconductors, right? Let's see here. Which one is it? Wow, a lot of these are doing terribly. SMH, Vanek Semiconductor ETF, is down 9.2%. Yikes. Yeah, the Vanek Semiconductor ETF. This is one of the larger semiconductor ETFs. Let's see here. Volume is 22.4 million. AUM is 72 billion. Semi? If I did semi? Semi only has an AUM of 1 billion. So this one is 72 times larger, almost 73 times larger than the semi ticker. Yeah. So this is like the semiconductor ETF. So wow, semiconductors just fell out of bed here. And then this is AI. And I believe this is autonomous driving, clean energy, IoT, Internet of Things, technology sector, robotics and AI, fintech, cloud computing, cybersecurity, expanded tech software, customer discretionary, materials, energy, biotech, video games, communication, industrial sector, aerospace, jets, transportation. Okay, now we're getting into the positive stuff. All that stuff I just read before, all those sectors are freaking red. All those sectors are down on the day. Yikes. Let's see here. So, of the few that are positive, marginally, financial, health, real estate. Oh, that kind of makes a little bit of sense. Real estate, pharmaceuticals. So, biotech is down, but pharmaceuticals is up. Excuse me. Utilities, consumer staples, and that's what I got so far. Wow. So this is just a sea of red. This is just a whole sea of red. This is bad on these U.S. equity sectors. And real quick, wow, and very, very few equity indices are up. It looks like New Zealand, Russia, the FTSE 100 are up, and then everything else is down. And what's down the most? It's Japan. COPC 200. Nikkei is down. And then the NASDAQ. So Japan fell further and just as hard as the NASDAQ did. The primary Japanese equity indices fell just as hard as the NASDAQ. And the S&P fell only about half as much as the NASDAQ. So I want to hear what Western Nakamura has to say, now that I know that. Western Nakamura would be a good analyst to listen to right about now to actually see what that relationship is. I really want to know what Weston thinks about this, what his commentary is on this. Okay. I think I now know what I need to do, who I need to research going into the stream tomorrow. I will do a stream tomorrow for you guys, and we'll do the whole shebang where we go over the indicators and the charts, and we go down all the asset classes, the currencies, the commodities, the bonds, crypto, US equities, maybe some European equities, right? Again, if you guys want me to do a specific equity, you can just let me know. Or you, honestly, what's even better is if you share some information about, let's say, a company that you're looking at, what you think about the company, or if there's a particular asset that you're looking at, why you're interested in looking at that asset, and share that here in the trading threads or the trading channels here. And then I can add on to that. So share some things that you're already interested in here into these channels. And when I'm around and I'm looking at the channels, I can, because I'll be doing my own research, I can contribute onto it. And maybe if we are digging onto something and we find something really, really cool, we can make a trade form thread for it and go really, really deep on it, like what we've done with the commodities crisis that's been going on for around. It's been going on with the Aussie fuel shortage, the SpaceX IPO, the OpenAI IPO, and there's also an Anthropic IPO, but I just haven't posted into it for a little bit here. And then you can see all the research threads that we got going on too. The Discord's free. It's a trade research Discord. Go ahead, hop on in, and yeah, I'll go ahead and let you guys go. I will see you all in a bit, all right? And I'll be hanging out in the Discord actually later this evening. So if any of you guys are on and still watching,